a few weeks ago, you asked me, are the Robinhood traders getting better? And I think that they're certainly getting quicker to pounce. But Mark Rubenstein, who is one of these people that has a Substack letter that I think is incredibly high quality. Can we talk about that for a second?
It does seem like the Substack thing, we're probably a little late to this than most people, but there are a lot of really...
I'm late to everything, by the way.
Yeah, I am too.
I'm not an early adopter.
No. I remember we had a friend in college when I was a senior in college, so this is probably 2004, and he brought his flip phone out and had a camera on it, and he goes, guys, everyone's got to get one with a camera on it. This is going to be amazing. And I thought, what a dumb idea. So,
well, you're still not on Facebook.
No, yeah, that's true. But yeah, there's a lot of great writers on Substack for these newsletters, and they also can be in very specific genres if you want to do a deep dive on specific companies or industries.
So this guy, Mark Rubenstein, writes a lot about financial services. There's Miles Udland, Turner Novak. I don't know how you pronounce his first name. Byrn. Is that Byrne?
Yeah, I don't know. That's this one. Sorry.
Byrne Hobart? That can't be Brian, right?
I like the...
how Brian Russell is weirdly spelled.
I can't remember the name of it, but there's a guy who writes, his name has escaped me, but he writes a Substack called Not Boring, which is also good. So yeah, I've gotten into some. I've probably got, 10 of these that come to my inbox on a regular basis now.
It's funny. I feel like bloggers went away, and now they're coming back, and it's good to see.
Everyone's a newsletter now because it's easier because you don't have to actually start your own website. You can just do it here, and it goes to someone's inbox. And for whatever reason, email is hard to kill. So if you can get to someone's inbox, I think you have an advantage.
All right, so getting back to the Robinhood traders, what are they going to do if the tide goes out? And by the way,
aren't they going to get short? They're going to short the market, right? They're momentum traders.
This is merely an observation. The stock market is if the stock market is as smart as you claim it has been, the stock market is acting like the economy is going to have a full reopen. A lot of the stay-at-home stocks are getting hit fairly hard. For example, I mean, you know the names, DocuSign, Spotify, Wayfair, whatever. They're all down 5% or so today.
That's what I think. This year, the stock market is smarter than the bond market. That's what I'm saying.
And I reiterate that statement is a farce because I think that when people say that, they're talking about corporate credit.
Okay. I think that argument is a farce, but let's move on.
But there's no insight into the Treasury yield curve.
There is insight because the insight is that the bond market thinks that economic growth is going to be lower. So if they thought economic growth was going to be higher, then the interest rates would move up. That's the tell.
Agree to disagree.
Okay.
So
moving on.
Anyhow, so getting back to the Robinhood traders for the third time now, this guy Mark Rubenstein in his Substack, which is called Net Interest, shared a study by the Shanghai Stock Exchange shows how badly retail investors perform. Between January 2016 and June 2019, they mostly booked losses in their personal trading account while institutional investors were up 11%. Although they own less than 30% of the market, they make up 80% of trading activity, according to the report. Quote, with speculative and gambling motion, many of them tend to trade frequently, but the more they trade, the more they lose. Okay, we know that to be true. That's
way more noob whales in China right now. That's what I'm saying. So a lot of places have made it easier because you have higher priced shares in companies. Like Amazon is what, $3,000 a share or something. And I remember when I was going to try to buy my first Vanguard index fund, I couldn't afford to buy into Vanguard because you had to have a $3,000 minimum investment. And so
I swear, you're the only person ever that started investing in target date funds right away and called it a day.
So this is like 2005-ish, call it. And I wanted to buy into Van, and you had to sign up, so you had to pay a $3,000 minimum to get in there. And obviously those have come down now. So I think this fractional trading is great. So you could buy a $100 slice of Amazon if you wanted to, even though it's a $3,000. And the same thing with Berkshire Hathaway, which is what, a $300,000 in change stock. So on the edges, this is a good thing. Now, of course, people are using it in interesting ways. This is from the Wall Street Journal that you pointed me out to, which I don't know. It's bizarre that it's in this article, but so they talk to this guy who buys into fractional shares. Mr. Gonzalez, a resident of Chino Hills, California, said he lost his tech job in March and has less than $10,000 in his portfolio, but he began doing deliveries for DoorDash and a proponent of the cannabis legalization. Mr. Gonzalez said he often spends $4.20 on stock purchases. The number 420 is a popular slang code for cannabis consumption among marijuana enthusiasts. All right.
Not something you expect to see in a serious news publication.
So anyway, he's spending $4.20 on his stock purchases because he can now do fractional shares. So I'm sure that's.
And you're telling me this is the smart money, Ben?
All right, fair point.
No disrespect.
Yes, anecdotes
to Mr. Gonzalez, but
they said at Fidelity that it's gone from in March the number of accounts that have done fractional trades have gone from 100,000 in March to almost 350,000 by July.
And there's another 120,000 at Interactive, another 60,000 at Schwab. So we say Robinhood traders as a short-term catch-all for these people, but obviously there's a lot more going on. It's not
people are trading
Robinhood.
Everywhere, which again gets to the point that Robinhood as a brand has become really strong in that they are entrenched with that label, right? Yeah. As traders.
By the way, which begs the question: why did Apple split 4-for-1? What's the motivation?
To try to mess with the Dow, probably. I don't know. Does it really matter? Yeah, it doesn't seem to matter anymore. We've talked about this a little bit, how I think especially with rates so low, we're going to see a huge boom in alternative assets in the years ahead. And we already are kind of seeing it. There's the Rally Road thing. We've talked to Masterworks about the art market. We've talked about income share agreements, Fundrise in terms of real estate. I think those things are just going to explode in the coming years where you're going to be able to invest in everything and people are going to make it easier and more cost effective and competition is going to drive down the prices. And if rates continue to stay low for a while, which I think it's possible that they could, even if they have a short-term spike from inflation, I think you're just going to see these alternative asset streams just pop up everywhere.
Agreed. So Eric Balchunas, which we mention every week, he showed the top 10 flows for ETFs over the past 12 months. Number 1, GLD.
Okay, and number 2 is the Vanguard Total Stock Market Fund. Pretty boring. Again, this is like the other side of the Robinhood thing. The big money is going into Vanguard index funds still, even though the little money is going into Robinhood and day trading.
Little money.
Well, I mean, that's probably what it is, though, right?
Yeah. No, I think you mean the smart money.
I think that the smart money is a term that should be retired at this point. There is no such thing. Right?
Will never go away.
Well, probably not, but you can't separate the market into that anymore because I know a lot of intelligent investors who are dumb money, right? They may be intelligent, they may be smart, and they did good on their SAT, but they're still dumb in the way that they invest. How's that sound?